Hey YouTube, you are watching Passive Earnings, and in this video, we're gonna talk about other opportunities that are better, in my opinion, than buying TSLY or any other yield max ETFs. So, we have a lot to pack in this video, so I'll try to jump right into the video. So the first reason that I think is the main reason is the total return. The total return, if you see for about 1 year, the underlying Tesla stock has returned close to from starting 23rd November is when TSLY was released. So if we calculate the total return there, if you would have invested in Tesla stock, you would have made 48% return here in just from November 23rd, 2022 to till date. Whereas if you go to TSLY option, you will see that the total return, it started at $20 and it ended at as of today it is at $14.70. So there is no upside even though the underlying stock has gone up. Basically, the only option that they play is with 5% margin upside, which does not cover the rest of the 48% or rest of the 43% in this case. And that's why TSLY yield max ETF is always going to go down in the price instead of going up, although the underlying stock that it is mapped to has seen some crazy gains over the past 1 year. That's one option. And if you see here, like the total return have been minus 26%, although been mm, it has been like a crazy stock which has paid extremely high yield, but at the same time, this ETF does not return or appreciate in the value, so the total return will always be on the low side. The second thing that I wanted to share, and the number two reason, is the chances of growth. So going back to the fact that the Tesla stock has gained over 48% over the last few months, starting from November 23rd till date. You see 48% return of Tesla stock, but the TSLY ETF, Yield Max ETF, is still down 27%, and the reason being they cap their profits. So, and then when the loss comes or when the stock price goes down, it goes in a free fall. So all you investors who are looking into this as an income opportunity, just remember that this is one of the best ETFs that YieldMax provides, and it has been down, although the market was up 48%, it's still down. So there's no growth opportunity in the value. One more thing I wanted to share on the same aspect is I used portfolio visualizer here with the $10,000 investment with dividends reinvested. As you know, a lot of people will say that TSLY pays so high of dividends. What if you calculate the total return, it would still be high. So I wanted to show you guys an alternate here, actually a couple of alternates here, and that brings us to the point of why selling cash secured puts are better. There is a ETF. It's a three times leverage ETF, which I understand is still scary, and sometimes it can take you to deep holes. But the total return over the past few months, if you see here from November 23rd to till date, the return has been phenomenal. It has been over close to 60%, over 59.38%. And if you have just invested in that ETF, you would have made a lot more money, close to 60%. And the reason being, even with including the dividends reinvested, although I don't think it's a good idea to reinvest the dividends of Tesla back into the shares when you see the price going down and there's no upside to the um, to the ETF, Yield Max ETF. So I call the Tesla as 100% of first portfolio. Second portfolio is SOXL, which is 3 times leverage of NASDAQ 100, and then TQQQ is the 3 times leverage of QQQ index NASDAQ 100. Pardon me. So SOXL is basically semiconductor leverage ETF 3 times. This includes Nvidia, AMD, all these big companies which have been part of the AI boom. So if you see the total return over the past year or so, since the inception, the total return here I'm seeing is close to $15,000, including the dividends and including the reinvestment. The total return has been 53% for Tesla, whereas SOXL and TQQQ have returned close to 147% each, which is crazy to think about. After 1 year of time period, both have returned almost the same, but both are good opportunities is how I see them fit. Even with the annual returns, if you see with dividends reinvested, these annual returns clearly show the winners here. These two go neck to neck, whereas Tesla returns are really low. The portfolio income, though, is close to $6,000 if you would have invested $10,000 at the beginning of this year, or the end of the last year. So you would have made half of the money back, but I do not believe that it would be a good idea to reinvest these dividends back into Tesla instead of selling cash secured puts, which brings me to a point where I'm selling cash secured puts on SOXL. So if you want to see 35 to 36% return in the market every single month, or over a period, every single month, that translates to 3% over a period of 1 year, that'd be 36% return. You can sell cash secured puts. What I mean by that is, you sell a put and collect the premium. That premium in itself will give you 3% plus 3+% returns. So in this case, for SOXL, what I'm seeing here is the current price is $21.67. If I go down here and see the $19 strike price, where I say that after 29 days I will be willing to buy SOXL that currently sells at $21.67 at $19. I will get a premium of 86 cents per share, or um, 86 $86 for 100 shares, meaning the total return, if you see here, I got the calculator up as well, 86 dollars on 200 and 2164 dollars turns out to be 4% return, close to 48% over the span of 1 year or 12 months. So these returns are crazy. But if you think about it, you are not investing $2,167, because your price would be and dollars and 12 cents. So if I correct it here, which will be $18 and 12 cents, or let's call it even $19, um, the returns are even more in this scenario. So 4.5% return over the period of 1 month. So this translates to more growth, first of all. Secondly, it gives you an opportunity to buy a stock or an ETF which is currently at $21, close to $22, at the price at the price of $19. And then on top of all of that, you are making close to 4.5% return on your investment every single month. So if you get even assigned these shares, then what you can do is you can start selling calls. So say for example, you have gotten assigned um, at $21 next time, and now you run a wheel strategy here. You sell a call. If you have now 100 shares in your account, you need to sell a call 29 days or a month out with, and your buying cost, consider if it was $21, uh, you can sell a call um, of $23, making you profit of $200 there, and then you will make $100 as well, $103 to be precise, over the month 1 month period. So that's how you can generate more returns than Tesla in itself. The only reason I see Tesla as a good fit would be you don't want to be hands on, and you don't want to deal with the market fluctuation, selling puts or selling calls, which hardly takes any time. So, probably half an hour in one whole month. You can you can you still don't want to do that, then your best bet would be to go with Tesla. But remember, the biggest um, drawback here is the market value. The total return, you will always be negative, or the price of the stock will always be going down, although the underlying stock, be it Tesla, Nvidia, or any other stock, is going up in the price. So yeah, I hope you guys like this video. These 3 points that I wanted to bring are the reasons why I'm not investing in Tesla. Instead, I'm selling cash secured puts and covered calls on the stocks that I own, specifically SOXL and TQQQ. So that's about it. I hope you guys like this video. If you haven't already subscribed, I would request you to do so, and I'll see you guys in my next video. Till then, take care of yourself and people around you. Goodbye.